Welcome to this episode of ACG's Growth TV. I'm Katie Mulligan, and I'm joined today by David Crean, Managing General Partner with Equitos Venture Partners and Managing Partner with Cardiff Advisory. David joins me today to talk about trends shaping healthcare and life sciences M&A. David, thanks for joining me.
You're absolutely welcome. Good morning.
So to start, we've heard that reports have indicated that M&A in the biopharma space was down a bit in 2021, but expected to pick back up in 2022. Is that consistent with what you've been seeing in the market?
Absolutely. From an investment banking standpoint, as well as a venture investment standpoint, we did see some tail off in 2021 in terms of mergers and acquisitions. And going into 2022, it's expected to be picking up. And there's a lot of forces and drivers behind that. Certainly, if you've been aware of the public capital markets, which has been a real bloodbath in the markets. If you look at the Standard & Poor's XBI, which is the kind of the biotech ETF, this year itself is down 29%. Over the past year, it's been down 40%. And what happens is it tends to be a proxy. The public capital markets tends to be a proxy for M&A as well as for partnerships. So when companies are out there trying to raise capital to grow, and there's if the public capital markets as well as the private capital markets, unfortunately that's where the spillover is. If they can't raise, they have to look at running parallel processes of either partnerships or M&A. The valuations on these companies, both public and private, are depressed, so there's some real discount buying out there. So those are just some of the drivers. There's a lot of other drivers that are involved with that. Companies are looking for innovation. These small biotechs, biopharma companies have great innovation. So if I'm a large pharma company and I want to buy some innovation to help out with my pipeline, to grow the pipeline, to deal with patent expiry, this is a perfect opportunity to do it.
And then switching gears over to health tech, this was an area that obviously has a lot of buzz, in part because of the pandemic. So I'm curious to know if that's kind of a transitory phenomenon that's carryover from COVID-19, or if this is an area that private equity firms and strategic acquirers are going to continue to be interested in.
Yeah, I don't see it to be transitory. I think it's going to be around for some time. I think what the pandemic has taught us is that, there's more and more telehealth being implemented, digital technologies, IT in healthcare. Patients are now wanting to have more of a role in this, and so it's going to be it's a huge driver, if you will, for investment by private equity, by strategic companies, by venture investors, putting a lot of money to good use there. So, it's an important part. What we've learned from the pandemic when everything was shut down, right? How did you interact with your doctor? How do you get access to patient records? So it's an important part to look at technologies and companies who are addressing that issue.
And then we'll end on life sciences. What are some of the factors that are shaping M&A activity in that space?
Yeah, certainly, as I mentioned in my initial comments, access to capital, both public and private capital. It's very, very difficult right now to raise money. I'm telling privately held companies who are not able to raise cash is conserve cash, be capitally efficient. So that's an important part. But because of the public markets and the difficulty with trying to raise money, even in the private markets, they should look at running parallel processes for either M&A or partnering. I'm seeing more partnering being done right now, getting access to companies' core capabilities, whether it's marketing or manufacturing, R&D, and in return, they're getting some non-dilutive capital to sort of put back into the company, help drive their pipeline. So we're going to see more and more of that. Innovation, as I mentioned, is a big driver. Companies, the buyers who are interested in doing either partnerships or buying these companies, they want to get access to, sellers, technology, so they can be more innovative. So there's a lot of factors in it, but capital finance, innovation, and just the need to, perhaps look at their portfolio optimization. are we doing the right things? Do we need to divest certain companies or within their portfolio, or within the company, or divest certain technologies? So being more capital efficient, being strategically focused on, on the prize, if you will. And what I see in life sciences this year's, we're seeing a lot more of that. We're seeing a lot of partnerships going on, and nothing really transformative in terms of M&A,
Okay.
which is what we typically see around the J.P. Morgan Healthcare Conference in early January.
Mhm.
No big, transformative deals, but we're going to see a lot of what I call bunts and singles, and but that's a way of building a business. You can certainly, build a business that way.
Mhm.
So thank you.
It'll be an interesting space to watch.
Absolutely.
Thank you so much for joining me on Growth TV.
Absolutely. Thank you very much for bringing me on.
For Growth TV, I'm Katie Mulligan. Thanks for watching.